We'll discuss some theory about the journal, ledger and the subsidiary books of account. Journal, what do you mean by journal? It is the book of first entry. As soon as a transaction occurs and when the documentary evidence is ready, we record them in a journal. We record them in a book called as the journal. In the journal, we are going to record the transactions in a chronological order. Okay. So before you record any transaction, there should be some documentary evidence. See, when cash comes into the business, we should in the business normally we record a cash receipt.
Yes, sir.
So when we receive cash, there will be a document called as the cash receipt. So based on that cash receipt, we have to record an entry. When a payment happens in the business, definitely you will also have a payment voucher. You have a document called as the payment voucher, which is filled up before making the payment, and you also have bills for which you are making the payment. So based on that voucher and the bill, we make the payment, and the transaction is first of all captured in the document called as the payment voucher. Based on that payment voucher, we are going to pass an entry in our books, or we are going to record an entry in the books of the entry in the computer. So for every receipt, there will be a receipt voucher, there will be a document, and for every payment, there will be a voucher called as the payment voucher. So based on these documents, we are going to record entries in our books of accounts. Okay, and we are going to safely store these receipts, and we are going to safely store these vouchers, payment vouchers. Tomorrow you want to check payments in your cash book, you will get all the payments. You want to check the documents, so you should be able to check them. And we'll put numbers to those vouchers and safely keep them in a file. Whenever you want, we can check the information from the ledgers to the vouchers also. Is it clear? So what is a journal? It is called as the book of first entry. As soon as the transaction happens, for the first time, it should be recorded in a book called as the journal. Transactions are recorded in the journal date-wise. So chronological order means in the order of date. Okay, and subsidiary books are also what? They are journals. They are journals. They are part of day book. Journal is also called as a day book. These are also day books. We can call purchase book as purchase day book. We can call sales book as the sales day book. We can call purchase returns book as the purchase returns day book or return outward book. Sales returns book as sales returns day book or return inward book. Cash book, bank book. These are all part of journals only. When the journal becomes big, when it is difficult to maintain accounting for your business in the form of a journal entry, to make the process quicker, we divide the big journal into small journals called as the subsidiary books of accounts. So whether subsidiary books of accounts or when you prepare a journal, we call it as book of first entry. They are called as primary books of account. What are they called as? Primary books of account. Because first of all, the information is recorded in these books of account. Okay. Next, once information is recorded in the journal, first of all, how many columns are there in the journal? Date column, particulars column, LF number column, debit amount, credit amount. These are the number of columns in the journal. So you record the transaction, you write the date, you write the entry, you write the debit amount, you write the credit amount. When do you fill up the LF number column? When we do posting in the ledger, we identify the page number in which we have done the posting. At the time of posting, we are going to, after posting, you remember the number and you write it in the journal. Okay. So at that point of time, the LF number column is filled up. Okay. Now, after you have recorded the transactions in the journal, what do you do next in accounting? We transfer the information to a book called as the ledger. That is also called as principal books of accounts. Ledgers are also called as principal books of accounts. Okay. Now, in ledger, we are going to have various accounts: cash account, capital account, bank account. If you want, you can have bank account also. And you have purchase account, sales account. All the accounts are there in the ledger. Now, all the information which is recorded in the journal, it is classified in a book called as the ledger. We group the information. In the journal, all the information is recorded, but it is scattered throughout the journal. Now you have to group the information which is scattered in the journal, and we bring the information together in a book called as the ledger. And when you transfer information from the journal to the ledger, that process is called as the process of posting. Preparation of ledger is called as classification. The process of recording a journal entry is called as recording. The process of preparing the journal is called as recording. The process of preparing ledgers is called as classification. The step-by-step process by which we transfer information from the journal to the ledger, we call it as posting of information. Yes. Now, ledgers are called as principal books of accounts because all the information which we require, cash balance we get from the ledger, debtors balance we get from the ledger, creditors balance we get from the ledger, asset balances we get from the ledger, liabilities we get from the ledger. So most important information comes only from the ledgers. That is why they are called as principal books of accounts. Without them it is not possible to prepare balance sheet, profit and loss account. Balance sheet to know the position of the business, profit and loss account to find the results of the operations. Okay. Normally in the olden days what they used to do is, they used to keep writing the journal and at the end of the week or at the end of the month they used to give postings in the ledgers. So periodically information was posted into the ledger, but nowadays it's not that. It's online, real time. As soon as you pass an entry, press enter button, the computer will immediately complete the posting. But even today, in the case of very big companies where lot of journal entries are passed and posting will take some time, so in such cases also the computer will also make a queue. The computer will make a queue of journal entries, and then at once it will start posting the journal entries into the ledger accounts. Imagine about a bank. Lot of transactions keep happening. So as soon as the transaction happens, the journal entry is recorded. But you have to send the information to the ledger accounts. But it will take some time. The computer server will prepare a queue of transactions, and once the queue is full, they will immediately post it. So there will be some time lag. But nowadays we can say the time lag is negligible. As soon as transaction happens, immediately we record an entry, press enter button, the computer will immediately do the posting. But olden days it was not like that. In the case of big companies, they will prepare subsidiary books, record the information, keep it like that, and weekly once or monthly once they would post the information into the ledgers. Because manpower requirement and the busyness with which I think the employees were also very busy. So they used to postpone the work of posting at the end of a week or at the end of a week. Whenever they found that some time is there, they used to complete the posting. Is it clear? No. But in that case what happens is, for 1 week, till the time posting is done, you don't know the current information. If you want to know cash balance, if you want to know debtor balance, if you want to know creditors balance, unless transactions done with the debtor and creditor have been posted to the debtors ledger and creditors ledger, it is not possible to find out the debtors balance and creditors balance. So when we wanted information, then we will complete posting, olden days. But now it's not like that. Every day, every transaction is posted and immediately, every day whenever the transaction is entered, it is immediately posted so that we have latest information available with us. Is it clear? So what are ledgers called as? Principal books of accounts. But here, they are also called as, see, if journal is called as the book of first entry, ledger is called as the book of second entry. Okay. If journal is called as primary books of account, ledger is called as principal books of accounts. Principal books of account. Can you tell me a book which plays double role? Journal and a ledger. Both a primary book of account and a principal book of account. Cash book. Cash book is a book which plays dual role. It is both a journal and a ledger. It is both a book of first entry and a book of second entry. It is both primary books and principal books of accounts. Is it clear? Now, when do we balance the ledger accounts? Maybe whenever we want to find information, then we are going to balance it. Normally we do the balancing at the end of the year or at the end of the month. When you want to prepare trial balance, when you want to prepare our P&L account, balance sheet, then we are going to balance those ledger accounts. I think you know how to prepare a trial balance now already. So, with this we complete the topic. Journal entries, ledger accounts, trial balance, subsidiary books of accounts. Now what I want you people to do is, please go back to home today and please revise the journal entries which I have taught you in problem number 2 of the journal. Remember, journal entry, second problem, I gave you a huge problem. We had lot of transactions. Remember, Krishna Limited. You want me to start final accounts or any other topic? Bills of exchange. Final account you want? Final account means not last chapter, not last chapter. It is one of the steps. So we'll stop for the day. Tomorrow please bring your ICAI study material.